everything makes a good investment. Let's cut through the noise, because when it comes to credit cards in 2025, the marketing is louder than ever. Every bank wants you to believe their card is the best, but here's the reality: investment. Not all rewards are created equal. A shiny sign up bonus might look great on day one, but what happens after the first 3 months? Most people grab that bonus and then watch as the card quietly gives them pennies back on their spending. The truth is, the best credit card is the one that gives you value, not just once investment, but every single day you swipe it. And that means digging deeper into how points are earned, how they can be redeemed, and whether they align with your actual lifestyle. If you don't travel, then those airline miles are just numbers collecting dust. If you spend heavily on groceries or gas, a card that offers real cash back in those categories can beat out a luxury travel card every single time. Investment. But here's the trap so many people fall into: annual fees. Some cards charge $95, $250, or even close to $700 per year. And for a lot of people, that's money straight out of their pocket with nothing to show for it. Good investment. But as the nuance, you can't just look at the fee, you have to compare it with the benefits. If a card gives you $300 in travel credit, airport lounge access, and better insurance coverage, investment. Suddenly, that $250 annual fee doesn't just pay for itself. It gives you more value than you paid in. But if you're not traveling, not using the perks, and not maximizing the credits, then that same $250 card is basically a $250 mistake. The only way to know the difference is to run the numbers for your own spending. And speaking of spending, this is where the real choice comes in. Man, do you want cash back, travel rewards, or points? Too many people chase points because they sound exciting, but let me tell you, points only matter if you know how to use them. Investment. If you're never transferring them to airline partners or booking hotels strategically, you're leaving value on the table. Cash back, on the other hand, is simple, clean, and guaranteed. You spend $100,000, you get $20, a 30, maybe even 50D back, depending on your card. No complicated systems, no redemption hacks, just money back in your pocket. That's why the card you choose should reflect your actual life, not someone else's Instagram feed. Finally, let's address the elephant in the room: interest rates and hidden fees. Because here's the hard truth: if you carry a balance, none of this matters. That 2% or 3% cash back you're so excited about, it's wiped out instantly when you're paying 20% or more in interest. The banks know this. That's why they can afford to give away rewards. They're betting on you slipping up. And even if you're disciplined, one late payment can hit you with a 35 fee and potentially crush your credit score. That's why the smartest play is this: treat credit cards as a tool, not free money. Pay them off in full, on time, every single month. Only then do the rankings, the rewards, and the perks actually work in your favor. So, which card should you use in 2025? The one that matches your life, multiplies your money, and never costs you more than it gives back. Not all rewards are created equal, and this is where most people get fooled. Investment. The banks know how to package rewards so they look irresistible on the surface. But when you look at how they actually work over time, the story changes. Think about the huge sign up bonuses you've probably seen advertised: or earn 100,000 points in your first 3 months. It sounds amazing, right? But the fine print always hides the real cost. Best investment to even qualify for that bonus, you usually have to spend thousands of dollars in a very short amount of time. If that's money you were already planning to spend, fine. But if you're stretching your budget just to chase points, you're not gaining value, you're creating debt. And the banks are counting on exactly that. What really matters is not the flashy start, but the everyday return. A card that gives you 2% cash back on everything you buy might not sound as exciting as 100,000 points up front, but over years of consistent use, it quietly puts real money back in your pocket. Here's another thing most people miss: how rewards are redeemed makes all the difference. Some cards make it ridiculously complicated. You can earn points, but the value of those points depends on how you redeem them. Maybe 1 point equals 1 cent for cash back, but 2 cents when you use them for travel booked through their portal. That sounds great if you travel a lot, but what if you don't? Suddenly, the value of those rewards shrinks, and you're left wondering why you jumped through so many hoops just to get what amounts to a small discount. In contrast, some cards keep it simply: spend money, earn cash back, redeem however you want. No expiration dates, no categories to track, no stress. And that simplicity is often worth more than complicated point systems that only benefit frequent travelers. As another trap comes from rotating categories. Some cards will advertise earn 5% cash back, but when you read the details, it's only for specific categories like gas, groceries, or online shopping, and only up to a certain limit. After that, the reward drops back to 1%. Sure, you'll get a little bump in rewards here and there, but unless you're extremely organized and track every purchase, investment, you won't maximize those categories. Meanwhile, a straightforward card offering a flat 2% across everything ends up earning you more in the long run. It's not flashy. It's not marketed as exclusive, but it's steady and reliable, and that's what actually builds wealth. The bottom line is this: don't be distracted by the headline offers. Rewards only matter if they consistently fit into your life and give you value over years, not just months. Best investment. That's why the best question to ask isn't which card has the biggest bonus, but which card will keep putting money back in my pocket every single day. Because once you understand that not all rewards are created equal, investment, you stop falling for the shiny traps and start choosing credit cards that actually work for you instead of the banks. Annual fees are one of the most misunderstood parts of credit cards. For some people, at the moment they see a $95, $250, or even $700 fee attached to a card, they run the other way. And on the surface, that reaction makes sense. Why would you pay money just to have the privilege of using a piece of plastic? But the truth is more complicated. Annual fees are not automatically bad, and sometimes they can actually be a shortcut to massive value. The key is knowing how to measure the fee against the benefits. Makes a good investment. If the benefits outweigh the cost, then the card pays for itself. If not, you're basically throwing away money every year without realizing it. Let's break it down with a simple example. Imagine a card that charges a $250 annual fee but gives you a $300 annual travel credit. Right away, you're already $50 ahead, assuming you actually travel and use that credit. On top of that, maybe the card includes perks like airport lounge access, free checked bags, or trip cancellation insurance. For someone who flies frequently, those benefits could easily add up to hundreds of dollars in savings each year. Suddenly, that $250 card isn't a cost. It's an investment that's returning far more than it takes. But here's the catch. If you don't travel, if you don't use the lounge, and if you never redeem the credit, then you've paid $250 for absolutely nothing. The value only exists if you use it. This is why knowing your lifestyle and spending habits matters more than the glossy marketing. A flashy luxury card may look appealing with its long list of benefits, but if those benefits don't apply to your life, they're worthless. On the flip side, a no annual fee cash back card might look boring, but for someone who just wants consistent savings on groceries, gas, or dining, that boring card could be the smartest financial tool in their wallet. The mistake people make is assuming that higher fees automatically equal higher value. That's not true. Value comes from usage, not from the price tag. Another angle to consider is opportunity cost. Every dollar you spend on an annual fee is money that could have gone toward your savings, investments, or even just your day-to-day expenses. If a card with a $700 annual fee isn't giving you at least $700 worth of tangible benefits, then it's not worth it. In fact, in many cases, people hold on to high fee cards simply because they feel they should, or because they don't take the time to reevaluate. Banks love this. They rely on people being too busy or too proud to admit a card isn't right for them anymore. The smartest move is to treat every annual fee like a business decision. Ask yourself, what am I getting in return? Do I realistically use these benefits, or am I just convincing myself that I might? Run the numbers honestly, and you'll see quickly whether a card is pulling its weight or draining your wallet. Investment. Annual fees aren't the enemy. Paying for nothing is. And once you see the difference, you'll never look at credit cards the same way again. When it comes to credit cards, investment. One of the biggest decisions is choosing between cashback, travel rewards, or points. Too many people make the mistake of chasing what looks exciting instead of focusing on what actually fits their lifestyle. The truth is, each type of reward has its strengths, but it only works if it lines up with the way you already spend money. That's the secret. Investment. You don't think bend your spending habits to fit the card should bend to fit you. Otherwise, you're just playing the bank's game and losing. Cashback is the simplest and often the most powerful option. Investment. It doesn't require you to learn a complicated redemption system, and it doesn't lock you into using points in a specific way. If you spend $1,000 and earn 2% cash back, you know you're getting a $20 in actual money back. That's money you can use for bills, groceries, savings, or even investments. It's straightforward, reliable, and guaranteed investment. The beauty of cash back cards is that they reward you no matter what your goals are. You don't have to wait to travel. You don't have to book through special portals, and you don't have to worry about expiration dates. For people who value simplicity and consistency, cashback is often the best choice. Travel rewards, on the other hand, it can offer incredible value, but only if you're the kind of person who travels regularly and knows how to maximize them. Airlines and hotels often have partnerships that allow you to stretch your points far beyond their face value. A flight that might cost $500 in cash could be booked for 25,000 miles. Making each mile worth 2 cents instead of 1. For frequent travelers, this can add up to thousands of dollars saved each year. Plus, premium travel cards often come with perks like priority boarding, lounge access, free checked bags, or hotel upgrades, which make the travel experience smoother and more enjoyable. But here's the warning: if you're not traveling at least a couple of times a year, investment. Those points don't hold the same value. They sit unused and the perks go wasted. In that case, a travel rewards card becomes a liability rather than an asset. Points-based cards land somewhere in the middle. These are often marketed as flexible rewards, and they can be valuable if you're willing to learn the system. Some points can be redeemed for cash, some for travel, and some for gift cards or merchandise. The catch is that the value of those points changes depending on how you redeem them. Redeeming for cash might give you 1 cent per point, while redeeming for travel through a special portal might give you 1.5 or even 2 cents per point. That flexibility can be a huge win for people who like options at investment. But it can also be confusing and lead to less value if you don't redeem strategically. At the end of the day, the best choice comes down to this question: where does most of your money actually go? If you're someone who values simplicity and guaranteed returns, a cashback card is your best friend. If travel is a big part of your life and you know how to work the system, travel rewards can unlock massive value. If you like options and don't mind learning the details, points cards can give you the best of both worlds. But the wrong choice, chasing rewards that don't match your life, will leave you with disappointment, wasted perks, and sometimes even unnecessary costs. The smartest move is to pick the type of card that pays you back in ways you'll actually use, not just in ways that sound exciting on paper. The hidden costs of credit cards are where most people lose the game without even realizing it. Rewards and perks get all the attention, but interest rates, late fees, and fine print are what quietly take money out of your pocket. Banks know that if they can get you to focus on points and cash back, you'll forget about the fact that the average interest rate on a credit card in 2025 is hovering around 20% or more. That number alone tells you everything. If you carry a balance, you're giving away far more in interest than you're ever earning in rewards. Think about it this way: a 2% cash back card sounds great, but if you don't pay off your balance in full, that 2% gain is instantly destroyed by the 20% or higher interest you're paying. That's not free money. It's an expensive loan. Late fees are another trap. One missed payment can hit you with a $30, $40 fee immediately. Even worse, some cards will raise your interest rate permanently if you're late just once. That means every future balance costs you more. even if you never make another mistake. It's one of the sneakiest ways banks make money off customers who otherwise think they're using their cards responsibly. And here's the part most people overlook. Being late doesn't just cost you fees. It also affects your credit score. A single late payment can stay on your credit report for years, making loans, mortgages, or even future credit cards more expensive. Investment. In that sense, the real cost of missing a payment isn't just the late fee. It's the ripple effect it creates on your entire financial life. Then there's the fine print. So many cards advertise no foreign transaction fees or zero interest for 12 months, but the details matter. That zero interest promotion almost always comes with conditions. Makes a good investment. If you don't pay off the full balance by the end of the intro period, you could be hit with deferred interest, meaning all the interest you thought you avoided suddenly gets added back. Investment. Foreign transaction fees are another sneaky one. Many cards charge 2-3% on every international purchase. If you travel abroad, even a little, those fees add up quickly. It's small percentages here and there. Investment. But over time, they erase the rewards you thought you were earning. The real lesson here is that rewards only matter if you avoid the hidden costs. A disciplined cardholder who pays in full on time. Everything reads the fine print, will squeeze every dollar of value from their card. But the moment you slip, whether it's carrying a balance, forgetting a due date, or ignoring a fee, you've turned the game in the bank's favor. That's why the smartest approach is to treat credit cards as tools, not free money. You use them to earn value, not to borrow. You track due dates, automate payments if you can, and make sure you never pay more than you absolutely have to. Because at the end of the day, it's a good investment. The hidden costs aren't really hidden at all. They're just buried under the excitement of rewards. And the people who win with credit cards are the ones who refuse to let those costs sneak up on them.